If you don't know Warren Buffett, then you're probably living under a rock. He's perhaps the greatest investor of all time. As the CEO of Berkshire Hathaway, Warren Buffett has a net worth of a staggering amount of money, nearly $82 billion, making him one of the wealthiest people in the world. However, despite being an investing pro, he's had his own set of mistakes over the years. Some executives would hand the blame to their underlings, but not Buffett. Like any good investor, he owns his mistakes and takes full responsibility when he fails to meet the expectations of his shareholders. Hey, welcome to Stock Market Mate. In today's video, we'll look into the 10 investment mistakes that Warren Buffett regrets. Before we get into it, make sure to subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. Once you're done with that, then let's get right into it. First one would be acquiring Berkshire Hathaway. If you're surprised, we are too. When Becky Quick interviewed Warren Buffett on CNBC, he said that the dumbest stock he ever bought was, yes, you guessed it, Berkshire Hathaway. In 1962, when Berkshire Hathaway was but a failing textile company, Buffett thought that he'd make a massive profit when more mills closed. As a result, he loaded up on stock, but later on, the firm tried to rip off more money from him. Blowing off steam of frustration, Buffett bought control of the company and fired the manager. He then took control of the business for another 20 years. He admitted that his impulse move cost him $200 billion. The moral here is not to let your emotions drag you into dire financial situations. You may feel upset now, but you have to think of what your decisions would do in the long run. Next would be investing in Tesco. At the end of 2012, Berkshire Hathaway possessed over 415 million shares of UK-based grocer Tesco. The firm sold some stock but still persisted in their investment. However, in 2014, the grocer announced that its shares and profits have depleted. Buffett wrote in his 2014 letter to shareholders that Tesco management influenced his initial sale of stock, which gave a $43 million gain. Woefully, Buffett didn't move quickly on the rest. He wrote, "As an attentive investor, I'm embarrassed to report would have sold Tesco shares earlier. I made a big mistake with this investment by dawdling. This missed opportunity cost a total of $444 million after tax loss." From Warren Buffett's mistake, you should learn to act upon decisions with speed and diligence. Next would be buying WAUMBEC Textile Company. As if he didn't express his regrets on purchasing Berkshire Hathaway in 1962, Warren Buffett made the same decision 13 years later, when he bought WAUMBEC Mills. According to him, the purchase price was a bargain based on the assets we received and the projected synergies with Berkshire's existing textile business. Owning accountability to his mistakes, Buffett confessed that his decision to purchase WAUMBEC was a bad move, as the company had to shut down not long after Berkshire bought it in 1975. The biggest lesson from Buffett's poor investment is to learn from your past mistakes. When an investment fails, you can always move on to the next one, where you can potentially succeed. Next would be overrating select manufacturing, service, and retail investments. In Warren Buffett's 2015 shareholders letter, he emphasized the depth of Berkshire's manufacturing, service, and retail operations, claiming that other businesses in the firm's portfolio have mediocre returns. Later on, he acknowledges that mistake. "In most of these cases, I was wrong in my evaluation of the economic dynamics of the company or the industry in which it operates, and we are now paying the price for my misjudgments," he said. At other times, I stumbled in evaluating either the fidelity or the ability of incumbent managers or ones I later appointed. You can learn from Buffett's mistake by not jumping into investments when you don't know much about it. If you lack knowledge or when you're barely familiar with a company, seek advice from people who do. You can always ask for an expert's opinion. Another would be not buying Amazon stock. When Squawk Box interviewed Warren Buffett on why he didn't invest in Amazon stocks, he confessed that he doesn't have a solid answer. "Obviously, I should have bought it a long time ago, because I admired it long ago," he said. "But I didn't understand the power of the model as I went along, and the price always seemed to more than reflect the power of the model at the time, so it's one I missed big time." We all know that Warren Buffett uses a smart tactic by not investing in businesses that he's not familiar with, but this has its own pros and cons. Backing on companies without prior knowledge is a risky move, but shying away from them doesn't entail that it's wise either. Sometimes, partnering with people who have a different set of strengths can help you avoid missed opportunities. Next would be failing to examine Lubrizol Corp stock. In 2011, Warren Buffett and Berkshire Hathaway were placed on the hot seat when David Sokol, then chairman of a few of the firm's subsidiaries, pitched Lubrizol Corp to Buffett as a potential takeover. Lubrizol was bought by Berkshire for $9 billion, and with that, Sokol gained a $3 million profit. However, Sokol violated his insider trading rules since he didn't disclose his stock ownership to Buffett. Buffett didn't notice this error right away. However, at the Berkshire Hathaway annual meeting, he confessed that he should have closely examined Sokol. As an investor, you should learn not to trust people easily. Don't be afraid to ask questions because those are essential for you to understand and succeed in the field that you're taking. When your reputation is on the line, you simply can't trust with the blink of an eye. Next would be failing to perform proper due diligence when acquiring general reinsurance. There are various investment tips that you can learn from Warren Buffett's purchase of general reinsurance. In his 2001 shareholders letter, Buffett presented plenty of insights on why Berkshire Hathaway took an incredibly massive hit on the purchase. This included failing to see potential terrorist attacks and enduring underwriting losses. Because they overlooked the situation, Berkshire Hathaway lost a total of $800 million. The lesson to internalize here is to be meticulous on the numbers. Run them by experts and trusted advisors and make sure to double-check. You should always be prepared for any shortcomings. Another is acquiring massive amounts of stocks from CONOCOPHILIPPS. Warren Buffett wrote in his 2008 shareholders letter, "Without urging from Charlie or anyone else, I bought a large amount of CONOCOPHILIPPS stock when oil and gas prices were near their peak. I in no way anticipated the dramatic fall in energy prices that occurred in the last half of the year. Already purchasing over $7 billion on 85 million shares of CONOCOPHILIPPS, Buffett failed to see that its market value was only $4.4 billion by the time he wrote the letter. Once again, this serves as a lesson to put much importance on consulting experts and advisors before you make huge investments. Getting a new perspective can help you see the bigger picture. Next is not acquiring the Dallas-Fort Worth NBC station. Not all of Buffett's mistakes come from financial losses. One of his biggest regrets is not acquiring the Dallas-Fort Worth NBC station that was sold for $35 million. In Buffett's 2007 shareholders letter, he admitted that he didn't grab the opportunity to buy the station by the time that he purchased See's Candies in 1972. He didn't accept the offer despite trusting the owner and seeing potential returns and growth. All this with literally no capital investment. When Buffett looks back on this missed opportunity, he stated that the station gained $73 million in 2006 even when it was pre-taxed. By the time he wrote the letter, the station was valued at a staggering amount of $800 million. The moral lesson here is to seize the opportunity when it comes knocking. And the last but definitely not the least regret is utilizing Berkshire stock to acquire DEXTER Shoe Co. Warren Buffett is not too strong on his regrets when he purchased DEXTER Shoe Co. But in his 2014 shareholders letter, he expressed his bitterness over how he paid a total amount of $433 million just to obtain it. Buffett didn't use cash on the transaction, but rather utilized Berkshire shares to fund the said purchase. When he wrote the letter, those shares were worth $5.7 billion. Buffett was so frustrated that he wrote, "As a financial disaster, this one deserves a spot in the Guinness Book of World Records." You may not be selling or buying companies that are worth billions, but you can learn from Buffett's shortcomings by properly allocating your resources. If your portfolio is steady and doing well, don't risk pulling money from solid investments to bet on a wild card. Making financial mistakes is always painful, but if you analyze and learn from your mistakes, you might have a chance of gaining something from the experience. All investors, even the famous Warren Buffett, must know that mistakes and failed attempts are bound to happen. What's important is for you to stay focused and resilient. If you enjoyed this video, consider subscribing to our channel for more. Thanks for watching, and we'll see you on the next one.